Hello guys, today I wanted to elaborate on 3 trades that I took on Pumpfun and 2 on Hype, and all 3 were losses, so maybe there will be some learnings for you here that you can profit from. So what we had here, we were in a confirmed model 1 accumulation with a nice context. We had a naked low. We moved up, got exhaustion to the upside. Here we got a nice ranging formation with a nice model 1 distribution. We had here some refined supply in this bigger 30-minute OBIF, and yeah, so basically I was looking to re-enter this model because there was not really an entry opportunity for me here. So I really like to get a re-entry in a confirmed model. So I saw this little range model 1 coming into the supply, and initially I was looking at this 10-minute structure supply, and I put it down here. So for me in this moment we tapped it and I entered. It was a pretty bad break because this was a 1 minute market structure, but it is after all a very low time frame range, and we SFP'd it, so we have to extend the low. We SFP'd it again, and here we broke it. Very nice, broke above. We created supply coming down. We could not close above, and I entered right here, stop loss here, and went to sleep. For me it was like 3:30 in the morning, yeah, exactly around here, and I went to sleep. And I was not only targeting down here for 7R, I was targeting down here. So I was looking to take a partial profit down here to be risk-free or even in profits, and then let the rest run for a very, very nice trade. This would be the profits of 2 months that I would have made in one trade. What happened? We went up once more, and we had a reason to, because we had a refined supply block in here, 5-minute structure supply. We tapped and go, went down. And what I really like about this, and in this moment I was not thinking about it, I have to admit. So I got stopped out here. It was exactly at the pre-hour of New York, and New York opened right here. We went down, got the retest, and went down. This was in Asia. We retested this at this high again, went down, and then New York nuked down. So in this whole process, because I was monitoring the trade here, in this whole process I always was thinking about limiting in around these zones and just make the trade like this or like this, limit in and target down. But I don't really like to limit in when I'm sleeping, and this is not my strategy to limit in and on certain blocks. Sometimes it can work, but here I wanted to monitor price. In this moment Bitcoin was a high probability environment, so yeah, the problem here was that I was looking at the wrong supply. This was the right supply. It got front run here, so I would never take a trade here front running supply, and here I was hesitating to enter because I got stopped out here, and I was thinking, okay, maybe the model is failing, but re-entered here, nuked, and it was a nice trade. So yeah, I was a bit in my mind because yeah, I wanted to limit in here, was not sure about the whole trade, and in the end I should not have taken it with the whole hesitation and being up till like 340, so I can't think that clearly. So for the next time I won't trade Asia because it's too late for me. I'm not that concentrated, and in the end I will make errors. And after the next day I looked back and saw that there was the supply got front ran, and I would not have entered the trade. So yeah, it was a nice trade, but we had a big liquidation move, took out some liquidity, and went up again with a nice liquidity thrill. I was looking about shorting this. I did not short nothing here because I saw that we went up and built buy side liquidity and shot up again. Took out this high, and then I was looking at this range in here. Again, a model 2 I was looking for, and I have to admit that I was in love with the idea to target the naked low down there and to get the trade to target down there. So for the next time, don't marry an idea and try to stay objective. And the first trade was not valid because we front ran supply. I was awake for too long, and I was not concentrated, hesitated, and still entered because I was marrying the idea of targeting the naked low for a nice 23R, but I got stopped out for like, I think 0.7. Let me look at the journal. So yeah, no, actually I got stopped out for a whole percent. I did not trail my SL, and even it was like 1.2% because of fees. It was a very tight stop loss. That's why I paid like extra 0.2% because of opening and closing fees. Yeah, so actually it was a 0.2 loss. I think this one was a 0.7 loss. So basically 2% loss on this coin. What happened here? I looked at this range, and what I did not like was the fact that the last move up was pretty fast. We got some demand in here, some sort of demand chain here and here, and I did not like this demand. As I said, I was a bit married with the idea to shorting to the naked low. So what I did here, we had a 1 minute breakout structure here, and I did not enter right away right here because it was 3 minutes before New York, so I wanted to see what New York Open will do. We went down, took the liquidity from here, and then went down again. What I did not like, it was a slower move down after all, and technically speaking, I should have entered here, not here, but I entered a bit higher up, stop loss here. We went very, very close, went down. We created some supply in here that got rigged there right away, but I looked at this little block in here that got mitigated here, and what I did after we came down so fast, we front ran the demand. I trailed my stop loss. No, I trailed my stop loss to here. I did not trail it there. I should have trailed there. Yeah, I should have trailed there. It was a 0.5 loss, so I don't know exactly how this. Yeah, so I put my stop loss here to this high. I don't know why I put it there, but on my exchange it says, yeah, it was a 0.5 loss. Yeah, so I put my stop loss right about here. Or maybe my entry was a bit lower and I put it here. I don't remember exactly, but maybe I played it like this and I had a worse entry and yeah, something like this, but it was a 0.5 loss. I got stopped out here on New York PM. Then I saw price reverse aggressively. Why? Because it took the liquidity from all these highs, and this was exactly what I did not like. We had a high, not a high, not a high, and this highs got taken out. And after this, we simply moved higher. We swept the market structure high here. And now look at this. We are coming down, but I don't think price is ready to target the naked low. Maybe, just maybe, we get another entry and I will re-enter. If we get something like this, it's too early to tell. But we have so much buy-side liquidity up here that if we get a move up here, swap the high again, come down maybe for model 2, and then looking at something like this. This would be very clean, but we have to keep in mind the context. We had a very, very long move down. This is basically the first low and immediately getting into a distribution. So if price is intended to go lower, we will see maybe a higher time frame range in here that reverses price even more, and maybe to new lows coming into the bear market that we are in right now. So yeah, unfortunately I took, yeah, right, it was a 1.7 loss here on Hype. That's part of the game. As for now, it seems we're front running this low. It is on 23,707, 750. Yeah. So this was Hype, and now looking at Pumpfun. Here on this trade, I was not planning to enter a trade here, but I was checking all my pairs here down, and I looked at this model, initially model 1. So price was around here, and I saw this nice range with a nice, very, very nice return to zone coming up here. Nice lows stacking up. It was pushing the limits. So this was 17 hours, and here we were, yeah, 15 hours. So when I entered, you can see the breakup structure. It was exactly on the 17 hours, and at this point I saw this lower high exactly at tab 1 and thought, yeah, this would be a nice liquidity target. But we basically had 3 equal highs here. So for the next trade that I take, and I see, oh wait, what's happening? Yeah. For the next trade I will watch for triple highs at tab 2, and what I should have targeted were this high. In this moment I did not notice this. I saw this and I thought, yeah, nice, we got a nice aggressive move down, but there was no supply. And looking at the lower time frame, this is all liquidity. So yeah, we could have a model, and why I still entered here was because, oh wait, I entered because we had a nice, very, very nice model 1 distribution coming into this liquidity. So we grabbed the liquidity here, had a nice topping formation, a very aggressive push down. I entered exactly ran around here, and then got stopped out immediately. It went for model 1, and then it went down. Again here I got stopped out. It was like around 5 o'clock, and I could have re-entered again here. We had a nice aggressive move down, so I could have re-entered here. Targeting down here for a 5.4R, but let's see what price did. It went up higher again and then sold off, and it grabbed some sort of demand in here. It was a tiny demand, nothing I would have put importance on, but often when you see candles like this is a liquidation move, not sellers stepping in often. So I would have looked at this range, and this would be the target. So as I often say, even in the backtesting videos, we often get this first market structure, then coming into a range. And if you look at this looks more like a range than this what I pointed out. So when price went up and took out this high, my mind should have been to look at a new range, not look away only because I got stopped out here. So look at the new range from a new perspective. Enter, sorry, it was not here, it was here, the entry. Look at this and re-enter here for 4.1R. So big learning for me. When I get stopped out on the Model 2, don't look away. Always check the Model 2 POIs. Is there something that will get taken out, like these triple highs? And could the first step be the market structure coming into the range? Because you see there's a long move up, first move down, higher high, and then coming into a range. This often happens, so I will be cautious to look at the first higher high as step 1 and 2, and maybe look more at ranges that creates after there. And I entered here on, let's see, on a 0.5 risk. So I only risk 0.5%. Why? Because I think Bitcoin at this time, it was Sunday, 4th of January. Let's look what Bitcoin was doing. So Bitcoin had a little distribution in here, but we had demand here, and I thought about, okay, maybe we get this to come down, and this move coming down, Pumpfun can hit the technical target and maybe Bitcoin reverses. So it was, contextually speaking, nothing special, and we were kind of expanding to the upside. But I saw a pump and it looked clean. I took it for half of a percent. So basically the first one was a 1.2 loss. then a 0.5 and another 0.5, so it was a 2.2% loss from basically the last week, from the 31 of December till 5 of January. Yeah, so this is part of the game. There will be weeks where I lose trades, and there will be weeks where I win trades. The beauty of this trading system is that basically I only have to win one trade with 1% and will be in profit or break even again, but likely I will be in profit because statistically speaking I win like 3.23% per trade, so I can lose 3, win 1 and be break even or in slight profit. So I lost 3, lost 2.2%, can win 1 trade and make 1% back. Yeah, that's just a video recapping my trades. I hope it helped. I will be transparent with all my trades, with all my losses and wins, because this is necessary. I'm making this video basically for me, because this YouTube channel is to achieve my, it's like an archive to my trades. I can rewatch them. I want to look back in a few months and look at the trades I took, my thought processes and trade management, so I can look back, review my own videos and see if I kept improving or I was stagnating. So if you're trading, make videos, record yourself talking about the trades, trade management, emotions you had entering, and make sure to look at your flaws to improve. And yeah, maybe the universe, the markets, whatever you want to say, will reward me with a nice Model 2, maybe Model 1 distribution to fulfill the macro target of 74k from this week of coming down. And from here on, I have some nice coins that I'm monitoring for potential long positions. And who knows, if I get it, it would be awesome. Here, sneak peek, paper, for example. If we get it, it would be awesome. So maybe if we get in this very refined demand coming down, maybe we can get something like this. Paper could be a nice spot play down here. Looking at Doge, this is just a range, but nothing I would trade this often. I don't really count this as a second tap because it was just a liquidation move. I don't like except here. Let's see. But yeah, I have some nice models coming up. I'm monitoring Bitcoin Cash here. It entered to the supply and it's still grinding up. I have to say that Bitcoin Cash is in its own world. So what I would like is maybe a rejection, maybe sweep this high, rejection down, coming up for Model 2, Model 1, and then sell off. But yeah, this coin really, it's doing his own thing. So look at 10th of October candle. So it was this coin didn't even bother. It was like 23% and a slow grind up. So it reversed the whole dump from the 10th of December. Yeah, so thanks for watching and have a nice day. Bye.